And for more news on the local market, I was joined earlier by Charlie Aitken from Southern Cross Equities. Well, Charlie Aitken, a big plunge on the Japanese share market, of course, and that's produced quite a volatile session on the local market.
Yes, Tiki, a little bit of meltdown in the region, and it was a very strange day. This morning, actually, there was a bit of panic around. The first bit of panic I've seen in about a year and a half. Market opening down about 80 points, a lot of forced selling around, a lot of liquidation of long positions. But by the end of the day, we finished down 16 points. So there was a few rays of hope in this mess.
It's not just, of course, the physical market that's been affected by the Japanese market. Take us through what's been going on in the futures market.
Yeah, crazy day as well in the futures market, Tiki. Volumes that I haven't seen there also in sort of, over a year, about 110,000 futures contracts through, Australian SPI futures that is, range of almost 100 points on the day, and that is extremely big volume. But for those of us who live in hope, big volume is often associated with the market bottom. So we'll see what comes tomorrow in the futures as well.
Are you expecting this sort of market impact to carry on beyond the next sort of day or so?
Well, it is interesting. I mean, last week we were all worried about Libya, and I didn't hear anything about Libya today. Obviously, the Japanese earthquake's taken over because it's our second biggest trading partner, etc., etc. Look, I think this is a serious event, no doubt. But whether the share market should put a PE on it, I'm not sure. And I also think what happened today is, yes, the Nikkei was down 6 or 7%, but eventually, in the end of the day, I believe you saw some money coming out of Japan and going back into Australia. So perhaps that's why our market reversed during the day today.
We'll be talking to the Managing Director of New Era Resources shortly, but other local uranium stocks have been hammered. Do you think that's quite a knee-jerk reaction, really?
Well, it's one of those knee-jerks where your knee hits you in the head, it was so violent. So absolute decimation in the uranium sector today. I think it's way too harsh. I mean, you've got Paladin down 16%, ERA down 12%, Extract down 7%. The smaller end of the uranium, wannabe uranium mining sector got absolutely destroyed. Look, I think it's very premature to believe that, nuclear energy is now over as a class and that uranium demand will fall. I think this is a major overreaction. If you remember back to the Gulf of Mexico oil spill, BP shares fell in half. BP shares now are 50% higher than the peak of the Gulf oil spill, and I think there's some real bargains in this uranium sector, and clearly an overreaction in my view, but that's how markets work at the moment.
We've just heard about QBE's exposure to the Japanese disaster, but how should we assess the impact on the insurance sector generally?
Well, I think the market's been a little bit looking at this the wrong way. I think the problem here is in reinsurance, not in the actual insurance losses. I mean, obviously, QBE came out today early and said, their maximum exposure was 125 million, and that's all dandy. But I think the future is what we've got to worry about here. I mean, if you looked on Friday night, the big reinsurers in the world, Munich Re, Hanover Re, got absolutely smashed in London, and that's telling you that the reinsurance markets are actually taking a big hit on this. What will happen is that premiums for reinsurance will rise and the margins of the Australian insurers will go down. So it's not actually about the headline losses, it's about the cost of reinsurance in the future and the future margins for the Australian insurers. And look, the Australian insurers had a bad day, all underperformed the market today, and not because of direct losses, because the cost of reinsurance will go up after events like this.
Now, in stark contrast, BlueScope Steel had one of its best days in months today. What's behind that?
Just another example of a crazy day. I mean, BlueScope shares have been on their knees, people worried about the carbon tax, even wiping out the viability of BlueScope and their Port Kembla operation. So, late last week they were $1.83. Today they're $2, up 7%, because the Japanese earthquake has taken out some Japanese steel-making capacity. So the theory is that Japanese steel mills will be out of action, some of them, for 3 to 6 months, and also that they will not take as much iron ore and coking coal from Australia, so the prices of those may come down. Before you can even blink, BlueScope shares up 7% because apparently it's all better for them. But this is just another classic example of perhaps an overreaction to this earthquake, Tiki.
And there's been Indian press reports of a looming bid for Australia's Whitehaven coal. What's your assessment of that likelihood?
Well, firstly, I mean, the beneficiaries of the uranium sector falling apart today were stocks like Woodside, which is liquefied natural gas, and the thermal coal producers, of which Whitehaven Coal is a new emerging one. Look, I think the story of the Indians being interested makes absolute sense. There was talk they were interested in Riversdale, and they have been increasing their stake in Riversdale, which is a coking coal stock. I think that this talk on Whitehaven Coal is right. And we also believe that there may be Korean power utilities interested in Whitehaven Coal. So the stock had a very good day today, up 3%. I think it was pretty close to a record high, and very good performance in a weak market. But it again reminds you, Tiki, that there's going to be corporate action in all this. Corporates are very cashed up in the resource sector, and they're going to take advantage of these pullbacks.
Charlie Aitken, thanks for joining us again.
Thank you, Tiki.